Gaps can occur for a number of reasons. When we look at this BPOP chart, Popular Inc., you can see a really big gap up back in the middle part of February. Now, what I usually look for are gaps to fill. And what I mean by that is after you see a gap higher, a gap fill occurs when you move all the way back down eventually to test that prior close from where the gap occurred. So again, back here in mid-February, you can see the gap up. Looks like BPOP gapped up to about $46 from that prior low, or from that prior close of about 40. It took, in this case, about 7 or 8 trading days, but eventually we worked our way all the way back down to fill that gap at that $40 area. A second example was in July. And actually, if you notice, there are 2 gaps. One gap up from about $47, where we open at about 48 and continue trading higher. The next day we gap up to almost 51 and pull back. The gap fills, however, you can see were quite different. The second gap up was filled the very next day. After gapping up from about $50 or so up to about the 51 area, we moved back down and were able to fill that gap in literally about 24 hours. The earlier gap, however, back in on July 24th or July 23rd, you can see that the gap fill going back and actually getting to that prior close didn't occur for about 2.5 to 3 months. So these gap ups can fill quickly. You can see it the same day of the gap up, or it can take sometimes as many as 2-3 months on a chart, sometimes even longer.